Hey everyone, I'm Charting Man Dan with the Chart Guys. We have a shortened holiday week as we wind down 2024, but there's still some important things here that we're going to be watching that are going to dictate how we head into 2025 after the big dump on the FOMC reaction last week. Let's get to the charts. If you missed it, I did a webinar on Saturday about blow-off tops, the setup, and whether or not the broader market is going to be shaping one up in 2025. Worth checking out if you haven't. My charts look a little bit different. In the top right here is a heat map, and this just shows RSI levels across a multitude of time frames. It's part of our super stack indicator and a nice quick glimpse. And we're going to look at some of these super stacks on some daily time frames as we go on through. So what is most important at this point is the low of this big flush on the FOMC reaction. This is the S&P 500 futures chart. We can see there's a support zone here. This was the post-election support that was found into continuation, and we essentially back tested that, and it is still holding. You might be saying, could this be a head and shoulders? Yes, that's a possibility, but the simple statement, again, we know how sucker punches go, and I am viewing this as a sucker punch because it was coming from bull complacency, especially in the NASDAQ, complete control, and then out of nowhere, over-leveraged longs get liquidated. But just like back in August, the weekly had a big flush. If we do not break that low, nothing changes. And so that's my viewpoint on the daily time frame at this point. We tested the high of Friday today, didn't break it, but we're right there. And again, it's all about that support. If it breaks, bears prove something and a shift is underway. If it doesn't, we're going back to all-time highs. So that is the line in the sand level. Very clear. NASDAQ, again, much more of a sucker punch in the sense that it was full bull control into that drop. Same deal. We got real close to the high of Friday today. Didn't quite get there. It's pretty much just tightening, 4-hour range. If you look at QQQ on the hourly, it's just a tightening hourly range. And knocking on the door of resistance. Let's go back to the NASDAQ. If it breaks, still a lot of space for a daily lower high. But it's all about that line in the sand. Look at the weekly chart. Are there any red flags? No. Again, my mindset since that sucker punch flush in August has been as long as we keep setting weekly higher lows, nothing changes, and bulls trying to hold EMA 12 here. I still have a hedge on. If you'll recall the broader market video I did, I believe it was this Thursday. I was talking about the gift of the hedge clarity, low risk top fish right off that level, and obviously played out nicely just for some protection. If you can't break this range bull, then we're not going any higher. And you can get a stop right there, right nearby. We roll over. Again, it's all about the low of that reaction. Semiconductors, look at how clear this support zone is and resistance. We got a clear battleground here. So just looking at support, bounce off of it, hold it, came close, hold it. And then here's our resistance with 3 rejections. We've been doing nothing but going sideways for the last 5 weeks. And it's possible we remain sideways for a bit longer. If we fail resistance, we pull back, slow holiday week. Next thing you know, we're starting 2025 still within this range. That's a possibility. But again, we're not going to forget the bigger picture, which SMH, a monthly higher low, is most likely. Again, when you get this kind of volatility, big drop, big bounce, you scout the tightening range. And anything above 200 is a monthly higher low. And again, if monthly EMA 12 holds, the bulls don't have a thing to worry about. And that's a good visual guide for a long-term uptrend on SMH. And NVDA, I've had a short for a while. I stopped out the second half of my short today when the daily lower highs broke. I had a tight stop because this is where I shorted and took some profit probably on this candle, and then stopped out the second half. And the reason I'm quicker to take profit here is because a monthly higher low is the most likely scenario, anything above 90.69. The clear relative weakness of NVDA has shifted back to clear relative strength the last few days. So that's enough for me to go back to cash with regards to NVDA and see how it plays out from there. But nice little trade to the downside. Tesla. So Tesla daily consolidation, again, no red flags at this point. We're battling to try and hold daily EMA 12 From pre-market, there's a support zone. From extended hours, I should say. 410 to 415, essentially. Low of today was in the 415s. And that goes all the way back here as well. So back to 415, 415s, 410s, 415. You get the idea. Previous resistance. Shutting off that for now. Super stack. So I have exited 2/3 of my swing position. Again, initiated here. And sold 1/3 at 421. Sold 1/3 at 477. And now I'm waiting to move up a stop with a new support level. I may add back one of those third sells because, again, there's no red flags in this consolidation. But what I'm going to be looking for is, can the bulls get the daily bounce going? And if so, entirely possible we just tighten up for a while. Again, there's a wide range here in terms of percentage. We can go plus 10% from here and still not be breaking resistance. But again, just, riding daily EMA 12. So nothing to worry about. When we lose it, we know eventually we'll look for a weekly higher low with tons of space for it to form. But overall, my mindset is, okay, we went straight up, started to get to the this is stupid phase. We know daily consolidation is due, and there's nothing surprising about the daily consolidation that's taking place at this point. One thing to note, remember the bullish 4-hour ascending triangle that we were highlighting? So it's a horizontal resistance level, and you reject, and you bounce, and you reject with a higher low, and you reject with a higher low, and then it broke bull. Check out GME. It's doing the same thing. So let's zoom out and then zoom in. So weekly time frame is a potential weekly bull flag trying to confirm. Daily time frame, choppy, but a series of higher lows. Every pullback is a higher low. Very clear resistance zone in the mid 31s. If we break that, we're looking at 33.70 and then up to 48. So there's a lot of space in there. And this is a bullish pattern to be watching. I would hope that we would reject one more time and then look for the higher low for an entry opportunity. But Red Devil was pointing out today that the Friday $40 calls were getting hit pretty hard. $32, $35 calls for Friday. So we'll see if the bulls make a run at it. TLRY destroyed cannabis stock, but Wall Street Bets was on it today. And you can see they brought the volume. So let's see if Wall Street Bets makes a move on GME with this bullish setup. XLF, I was thrown off a little bit today with the dividends being distributed. XLE, which we're about to look at, was green today, but there was a while where I was like, wait, are we down? The trading view is not adjusting for the dividends as they should be. And XLF had a dividend today as well. But either way, inside bar, trying to get the bounce going and looking for a weekly higher low to form, anything above 46.03. So keeping an eye out for that. And again, we've been closing above weekly EMA 12 for 6 months. We closed on it last week, and here we are battling to try and hold it again this week. Healthcare. So healthcare had a daily super stack, which again means we were at extreme RSI on the daily, 12-hour, 4-hour, hourly, 30-minute, 15-minute, and 5-minute. When that signal triggers, it means every single time frame that is shorter than that is firing as well. So that has me watching for some kind of relief bounce, which we have, but I'm looking for a more significant relief bounce. I'm not interested in healthcare to trade it. I'm watching it because of its impact on the broader market. Again, we have this support zone. It's adjust for the dividend, but support zone down here. Previous, look at this beauty. Previous resistance, 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 support, support, support. If bulls are going to bounce, this is the spot to do it. So we'll see if they can pull that off. I am in the energy sector. I longed on Friday. Again, same deal. Super stack over daily, getting absolutely crushed. That's enough to get my interest. And again, we're not adjusting as we should here. Adjusted for the dividend, we essentially closed at what would be 84.70 or 84.69, which means we closed over the high of Friday. But I don't know if TradingView is just not updating their data yet or what, because it's not showing it. It's still showing a daily stair-step drop when in reality, if the dividend wasn't distributed, we'd be over that high of Friday and the daily bounce would be underway. The key here is 4-hour EMA 12. Again, we want to identify a chart and then make a statement where that has been the case for a while. And we could say we've been rejecting from 4-hour EMA 12 resistance for weeks. And I know that the bulls don't prove a thing unless that turns into support. And we're battling it again. Friday, we pulled back just under it. Today, we closed just under it. Again, if the dividend wasn't in play, we would have closed above it. But it's something to keep an eye on to see if the bulls can prove an oversold bounce. I'm not looking for a home run. I'll be looking to take some profit at daily EMA 12. Then maybe try and let a longer-term position play out. But it was just extreme enough. I haven't traded the energy sector in years. It was just extreme enough where I say, all right, I'll give it a try. I like oversold bounces. Quantum names, the volatility here continues to be a day trader's dream. The most likely scenario is a 4-hour equilibrium with all this volatility. So on the gap up this morning, knew to be looking short. Problem was Fidelity didn't have any shorts available for any of the names that I wanted to trade. But I'm looking for something like this. So QUBT, and again, on the daily, it would just look like our tightening range. RGTI had news today. It got right up to its key resistance in pre-market. Again, gap up for profit taking. If the bears follow through a bit, we look for this equilibrium to tighten up. And QBTS, the other name, just scouting the most likely scenarios, tightening daily ranges, and we'll see if we get them. And again, look at the super stack here, showing us the weekly RSI up at 93. Just lets us know when some things are extreme. The monthly RSI at 90 on QUBT. So bulls aren't done yet, but the direction that we break this tightening range is going to have significant implications on how we start 2025 in these names. Dollar weekly bull flag confirmed. Highest levels in 3 years. I'm weighing a trip to either Mexico or Puerto Rico, and the dollar's strength leans towards Mexico. So daily bull flag potentially in play, but strength overall, 3-month time frame. That's a tightening range bull break on the 3-month. So gold ignoring it a good bit. I mean, we may roll over in a monthly consolidation here. It looks like we're back testing this support zone. Clear double top at resistance. Look at the monthly for gold. We started monthly consolidation last month. We can easily drop down to monthly EMA 12 and still be extremely strong overall. So just, open to the possibility we get another leg down. That's why I was exiting silver on the weekly lower high. Exited more position. I still have some for a monthly higher low off EMA 12. Daily oversold conditions, but been sizing down metals because of dollar strength. Going to start watching oil now. I guess I have to care because I'm in the energy sector. Just sideways. Volatility is coming in oil. Look at this weekly chart. You can't get much tighter than that. So viewing this as a high, low, lower high, higher low, lower high, higher low. Just tightening up. It can take another week or two, but volatility is going to spike in oil to start 2025. Which direction are we going to break? I don't know. But it's always nice to know volatility is coming because that means you can pay attention to look for an entry on a break of this tightening range. And if it breaks up, that will help the energy sector with its oversold bounce. Natural gas going well. Thesis confirmed. Weekly inverse head and shoulders played out. Bull cross of EMA 12 and 26 on the weekly trying to take place for the first time in years. And now the key, backtest previous resistance as support. Resistance, resistance, resistance. Today we backtested and held it. And let's see if that remains the case. Definitely want to see that hold, ideally. And again, my target, I'm looking up. I mean, if this is going to be a long-term bottom, which is obviously what I'm hoping for with this entry, I'm looking up in the 5s. 50% from here? We'll see. All right. That's all we got. Do good things. Have a great holiday week. Don't overtrade. I'm probably not even going to trade tomorrow half day. Be back at it Thursday. Just a reminder, YouTube's schedule is going to shift next year in terms of we're going to be putting out a good bit less public content. I'll be putting out a Friday market, this kind of video, market wrap-up video every Friday. But that's going to be it. And then some crypto. I'll do, a crypto video a week. Lori's going to do a pre-market stream once a week. I'm going to be live streaming Monday mornings for Chart Guys members, but just pumping the brakes a bit on the YouTube content because YouTube has been punishing us for it for years. All right, see you soon.
Give me the big old hug. Get them chicken legs kicking, babe. Yeah, you pretty much feel it.